A ton of new tariff updates this week, but nothing as shocking as April's Liberation Day. So we're in with a quick update on the week's tariff news. First, essentially all tariffs were delayed until August 1st. This would be the start date for countries that received updated tariff letters, as well as the reciprocal tariffs from April for countries that didn't. The White House insists August 1st will be the final tariff extension, but that's also what they said about July 9th just last week. Second, as mentioned, 20 countries received tariff update letters with mostly minor adjustments from the earlier reciprocal tariffs, if any adjustments at all. We didn't really see the point of the letters given the extremely minor adjustments, and all reciprocal tariffs were extended anyways as well. These continue to trickle out, and we may see more over the next few weeks. And finally, third, some additional industry-specific tariffs were announced as well. This includes a 50% tariff on copper, also starting on August 1st. In addition, there were some threats to increase tariffs on pharmaceuticals to as high as 200%. However, unsurprisingly, markets moved very little on the news. The tariff rates really barely changed and is effectively just another 3-week delay. Markets also don't seem to believe the August 1st deadline. The White House has continued to walk back its tariff threats ever since the April 4th announcement. We would think even other countries currently negotiating may not be taking the threats very seriously at this point. If this is the pinnacle of tariffs, constant threats but trade restrictive tariffs never actually imposed, we agree with the market optimism. The 10% baseline tariff will likely increase costs some, but unlikely to drastically shift demand and inflation long term. However, we are cautious markets may not be pricing in a worst case scenario. If the White House's threats fail to produce urgency for our trading partners, we wouldn't be surprised to see a scenario where the August deadline, or some later extension down the road, is not extended just to prove a point. This could cause some market shock. Recovering consumer and business sentiment may reverse without the current expectation that they're not actually going to be implemented. While we wouldn't expect a pullback of the magnitude in April, initially at least, we could still see a market correction, but with further downside if not walked back shortly by the White House. We remain cautiously optimistic, but continue to monitor economic data to see how resilient consumers and businesses will remain with the ongoing uncertainty remaining in overhang.